Hello, Warriors. Rahul, how are you? Welcome to the beginning of the season of the FX NFL, which stands for in FX, no free lunches. How's everyone doing? Important time to get ready. All the gazillionaires are back from their vacations, ready to try and take our money. It's our mission to take theirs. Shahab, how are you? Okay, just a few markets have kind of cobwebs after a 3-day weekend. Kind of throws off my rhythm a bit when I have 3-day weekends like this. So anyway, I'm taking a shot at the long side of crude just because of the way it held up compared to the S&Ps. But actually, you look at the S&Ps here, and even on the 1 hour, maybe we get something like this. But I just don't think it's done. And something I am looking forward to is a change of seasons, WD Gann, the equinox that we're going to have here. But this is starting to look like some type of wedge here in the S&Ps. And that we could get some type of retest here. If we start getting back above this line here, about 2908, just something to pay attention to. What makes me think that is a possibility, whether I'm right or wrong on crude, is the yen had a pretty good day actually while we were off. Came in lower and trying to hold. I just see this confluence here on the 4 hour of the 200 and this horizontal line. Maybe we're putting in some type of bottoming formation that if we got over 106.70, you're talking about 109. And that part of that could be that, we're still due for a bear market rally and some of these yields. We could rally back to, 170 or so and then go to new lows in bonds. So I still think the bigger bubble is the bond bubble, though, it's really hard to be a contrarian here because everyone is saying, what's happening globally, with what's happening with negative yields, it's just going to keep dragging U.S. rates down. That's a narrative everyone's accepting. But, we've had one heck of a move down here in yields, haven't we? From 320 to call it 140, 180. So why can't we rally 38% back, which would take it back here towards 180, and then have, when risk off happens, say we get a retest of the highs in the S&Ps, and then finally get some type of break for a wave 4, that's when we could go to new lows. Interesting action in Euro Pound. So right about the off number here. So, this 9150, it still could just be a correction. You had 300 points here. So this is about halfway back, 150. So watching that, especially with all the news happening here in the UK, dollar index, I still can't fade it. I remember looking for 99.20 for a while. We are beginning to diverge up here in the Dixie up here at 99.40. Still not, I still don't feel ready to fade it. Looks like we took out this 3 driver here. Let's see. Yeah, right there. Let's go here. Anyway, it's not letting me continue it. But looking at on the 15-minute, looks toppy. There might be scalps. I'm not ready to declare a top. What is also interesting is what happened in the yuan last night. So we did push to new highs. Was talking about 727 as a possibility. Still is a possibility. So, even here on the 1 hour, we're above 70. So it doesn't look like the wand's done. And it's going to be interesting to see if we go to 727, what the S&Ps do. Gold, let's cover the gold right now. I don't want to just sell it anywhere. I want to see what happens with the gold silver ratio. I'm almost more inclined to short the silver at new highs over 1860 because we'll have all kinds of divergences this time. The 4 hour really, this was too much mo, but over 1860, I believe that was a high. 1865, we won't confirm on the 4 hour, and we're still playing around with this megaphone formation. So we'll see. It's cutting through it all over the place. I still think that there's a good correction in the metals, and I'm not bullish here. Long term, I will be, but I think gold's pretty vulnerable longer term, just for a shakeout move that could take us. I'm thinking way down here, but one day at a time. Right now, it looks like a 1 and a 2. Maybe we get one more high with the yuan heading up to 727. That's a possibility. So I'll be watching that. And just not a lot of strong conviction coming into this Tuesday. Maybe because of the weekend, tomorrow is turnaround Tuesday. But I really think it's important going into this fall trading season that you guys get prepared for our promotion that we run every fall, so that you could put ForexAnalytix on your team and have a great fall. There's something that can happen in this business. It cuts both ways. We all hear about the failures and people busting out, but there are certain weeks and months that could really make your whole year. And if you've just been treading water, which hasn't been easy, Blake has said that several times. This year's been a tougher year than usual, that you could max out the end of the year by having us as part of your intelligence gathering every day, so that you could, whatever you're looking at, you get all the multiple looks from some very good analysts. You also have Elliott Wave, harmonics, basic technical, candlesticks, and macro. So everyone here that's not new, they know the talent on this team. So that's what I mean. You could pull up anything right now. That this is candlesticks. See what Greg is saying. Looks like he's still bearish, but oh, look, he's looking for 101 and then a major low. Interesting. Okay, so if this would happen on a failure in the S&Ps, I believe, and then the bonds, one more big rally in the bonds. So I really do encourage everyone to consider becoming part of our trading community. I've been around in the business for a while, and really it's the best team I've been part of in my career. So I've become better just through osmosis of listening to these guys. ISM, Ben, okay. Tom, you were trading on Labor Day? It's against the law in the US. You must be from overseas. No labor on Labor Day unless you're pregnant. That's the law here. Okay. So Blake, hope you had a great weekend, buddy.
Hey, good morning.
God, it's been, I can just imagine what it's like in the desert, because I've had to hide out here in San Marcos. It's been miserable, oppressive.
Yeah, you're talking heat wise?
Yeah, heat
Oh,
and humidity and
yeah, it's disgustingly hot, and it's been nasty here. I'm actually so excited for summer to be over. And I was just, there's so many reasons for me personally why I love summer being over. It's the heat is one, because I'm over it. After being in 100+ degree weather for like the last 4 or 5 months, it's like, okay, I'm
yeah,
done. And then Christmas is coming. That's the start of the trading year.
yeah.
Football season. There's also so many good things that happen this time of
We
year
have to
for
go
me.
back to school. Kids
Yeah,
go back
kids
to
go back
school.
to school, come out of the house. It's awesome.
Yeah,
Yeah, so all the good stuff. But we'll talk about the beginning of, excuse me, the beginning of the season. This is the beginning of the trading season, and you're right. All the traders are back. We've seen a continuation of what we've seen, for the last couple of weeks has just been dollar strength, and the dollar. I actually did establish a very small euro long down here, and you can see the reason why.
yeah.
We have this descending wedge. It's
Yeah.
161% extension. So from a risk reward perspective, it's worth it to me to at least stab at it. Now, does that mean I'm all in and huge position? No, I could very easily be out of this position here within the next hour or two. It just I know that there's a lot of support around the 106 level, and 106, or excuse me, 106 109 level. Maybe that's where it's eventually going. But the 109 level, we have the 109.20, which is 161% extension of the last big move higher. It is the descending wedge low. So I've been wanting to take a stab at it down here. But there's a couple other things that have developed. It's not just the euro dollar. So that's the thing I want to explain. If you think I'm just looking at the euro, you're wrong, because a couple other things have happened this morning that's kind of pushing me to this conclusion. Now, let's also realize that the euro is trading exceptionally heavy. The daily sentiment index, and I hadn't, I didn't even look on Friday, but I'm assuming it's around the 10.
It's under.
Is it under?
Yeah,
I'm
buddy.
assuming we're down there, and but let's look around at some of the majors, and I want to show you why I'm considering, or why I'm establishing a small position. By the way, I own it at 38, so just out of the money a couple pips, but it's not like I'm doubling up and going, 4 times my normal size and getting long because I'm expecting a move to 112. That's not it. It's just I know we're at support. So it's like if I can get a reversal today, by the end of the day, if we close at, let's say closer to 110, I'd be happy with that. Now, before I show you the other charts that I'm looking at, I also have to, state that in order for the dollar to turn, I think we're going to have to see a deterioration in data. So, and today's data, which is important, is the ISM. It's the ISM services data. So if you go over to the calendar here, you'll notice that we have the ISM data that's coming up. A little bit. This is the manufacturing data. It's non-services. So the data is still above the expansionary level of 50. We haven't seen a break below 50 since the end of 2016, so we're talking 3 years. We're going to have to see the data markedly deteriorate starting today in order for the dollar to actually turn, in my opinion. That doesn't mean that it can. I'm just saying, in my opinion, and like I said, technically, I'm willing to take a little bit of a pop shot at it here. But let me point out a couple other things that I'm looking at too, that's leading me to this idea. So let's talk about the cable. Now, the pound, just if you guys didn't see it, we blew through the 120 level, and we knocked out some stops below 120. Now, if the pound can hold above, let's just say 120, all right, for whatever reason, you can argue and say, well, here's the reasons why it's going to, or it's not, it's going to continue to break down, whatever. I'm just looking at it from a technical point of view here. Let's say we blew through 120, knocked out all the stops below there, and let's say we closed near 121. Let's say it happens. Let's just, for argument's sake, it doesn't matter if I'm right or wrong. Let's just say for argument's sake. But if we end up holding these lows and, we're one step closer to a possible double bottom, a possible false breakdown. So I'd like to see how the pound closes. If we can close near 121, then that sets up a potentially technical bullish reversal. That's, that would be something. Okay, that's something to, consider. Look at the Aussie. The Aussie, we held triangle support. The RBA met last night. Now, they kept in the dovish commentary, which would be the if needed. They can move rates lower if needed. So they kept in that commentary, but the Aussie managed to bounce. That's, I look at the Aussie and think about all of the news that's come out with the China-U.S. trade war and this deterioration in Chinese data, and the Aussie actually is holding up pretty well. I mean, if you think about the last month of trading, the Aussie hasn't broken down yet, and I think that's impressive. Now, does that make the Aussie bullish? No, but it's holding up, and that's something that we should acknowledge. And even following the RBA last night, the rate decision, they did keep rates unchanged. We expected them to keep rates unchanged. We expected them to keep dovish, to have some dovish commentary. They did, but the Aussie still did not break down. All right. So if you're short Aussies, you're probably thinking, wow, I can't believe we're not lower right now. Right. So you have the euro at support. You have the pound that might have just taken out stops below the 120 level and might be setting up a reversal. You've got the Aussie that's holding triangle support. You got the Kiwi, which just hit the 127% extension of the basically the 2018 low. Okay, 2018 low to the highs of December. And we just hit 127% extension, very oversold. So there's a lot of support in the Kiwi down here. And by the way, with the Kiwi, just so you can see it, we might have put in a false breakdown in the Kiwi too. For me to be convinced about the Kiwi dollar, I got to see it move above like this trend line. But still, this is the evidence that I've got building for potentially some dollar weakness. Now, I'm not done there yet. Now, the dollar Canadian is bullish. I mean, this thing just broke out. We've been in this range and finally broke out. But you have to realize that a lot of the other dollar pairs have broken higher too. I mean, look at the U.S. dollar Norwegian krona. That thing just continues to rip. U.S. dollar Swedish krona. I mean, this thing is just on fire. I guess we're stopping, here at 996 or so. But the Swissy is stalling now. Okay. After it's had a really strong week last week, it's kind of stalling. So, and the dollar yen, I don't even factor into any of my decision making because it's just dollar yen's doing its dollar yen thing. So I'm just kind of letting it do whatever it's going to do. But there are some pairs that are starting to show that the dollar could weaken a little bit. And that's why I'm willing to nibble just a hair. And it's not like I'm getting aggressively short the dollar. It's just, I'm willing to start putting a toe in the water and seeing if we can see some reversals around here. And like I said, by the end of the day, I'll know a lot more. By the end of the day, it kind of depends where we close at in all these pairs. Can the euro close back at 109.60, 109.70? Can the pound close at 121 or somewhere near there? Can the Aussie close back above 67.50? Those are things that I'm seeing by the end of the day. And I think a lot of it is going to have to be due to data. Now, one last thing before I bring in Stelios to see if he has any comments regarding, what's happened what's happening with Brexit, because the pound, by the way, the pound spiked up. If you guys didn't see it, the pound spiked all the way up to 121 or 120.80, and that obviously came off. And I have no idea why it spiked up there. Well, I mean, there's a few things that came out, but maybe Stelios can shine a little bit of light here in a few minutes. But one other thing that I wanted to mention really quick regarding some of these majors in the dollar specifically is I want to talk about bonds, because Coach was just talking about the bond market. And if you look at bonds, here we are, we've been in this ascending channel, just moving higher. My fear is if bonds actually reverse up here and we start to see them come off, that means yields go up. And if yields go up, we haven't seen what the dollar does with yields go up. We've seen what happens when yields go down. Yields go down and the dollar has been strong. But if yields go up, what happens to the dollar? And that's my one concern about being short dollars, is if we see the bond market sell off a little bit here, well, how does that affect the dollar? Because the dollar has been going up, with yields going down. So, it's to be seen. But I think that is a risk if you're doing like I'm doing and you're kind of nibbling against some, dollar shorts. You got to be aware of that. What happens if bonds come down. And I don't know if we're guaranteed that bonds are going to come down here. I mean, bonds have been very strong, and I don't know if they're going to back off or maybe even continue higher. The bond market has been abnormally strong, and yields have been really weak. So maybe this is the bond market signaling to the Fed that you need to really start cutting rates here, but we'll see. Anyway, I wanted to bring in Stelios and see if he had any comments regarding the cable, because the cable's still trading heavy. It's spiked up. Good morning, Stel.
Good morning.
Good morning.
Yeah, it's been another interesting day in UK politics. So
so what's making it so interesting aside from the normal stuff?
Well, the normal, yeah, it's become normal to hear all sorts of. I don't want to say crap, but all sorts of crap. Basically, what happened is a group of MPs are getting together, and they're going to try one more time to pass a bill that's going to basically force the government to not. Basically, it's going to take the no deal Brexit scenario off the table, and that all this time we've been saying, look, the negative scenario for the UK is no deal Brexit. And the market, I guess, as soon as that happened, it gets a little bit excited, and people think, oh, if no deal Brexit is avoided, then surely we can only have positive outcomes. So you saw a little spike in sterling, but my opinion now is that it's not just a no deal Brexit that's going to be negative. We've seen so many months now. The more they prolong this misery, this suffering, the worse it's going to be for investment, for companies, UK companies, for everything. And we're seeing it in the PMIs, which are coming in really weak. So the market got a little bit happy originally, I think, but they're realizing, look, if there's going to be another delay for, I don't know, 3, 6 months, whatever, the UK cannot recover. So that's, I think, is being seen as a negative. Plus the fact that Boris Johnson said, look, I don't want elections. Nobody wants elections. But if we take the no deal Brexit scenario off the table, then I have nothing to negotiate with. And he's actually right. This is, in my opinion, the only weapon that the UK has got at the moment. So if you take that off the table, what can the UK do? And he basically alluded, he said that there's a good possibility that we might have elections in October before the deadline if such a bill gets passed. So that's the seesaw battle that we've got at the moment in the UK, and it's difficult to predict what's going to happen or to really anticipate which way the pound's going to go on every little step that's happening. Elections, no elections, this bill gets passed, it doesn't get passed. It's a big mess at the moment.
Right.
So,
and I have to agree here with Boris Johnson is running around saying, it doesn't matter, we're leaving October 31st, no matter what.
Yeah.
And that like it or not, but that's his ace in the hole, if you will. Well, what he thinks is his trump card that he's holding, because he's going to the EU saying we're leaving, you know,
Yeah.
but if he can't do that, then yeah, the UK is screwed, right?
Yeah.
Period. I mean, and that's probably why he told the Queen, asked the Queen to shut down Parliament, and just because it's like, look, I want Europe to see that I'm serious here.
Yeah.
I mean, because from an outsider looking in, like as an American, just kind of observing this nightmare that's happening, we step back and I look at Boris Johnson. I'm like, he may be crazy, but he's dead set on what he's doing, right?
Yeah.
And I'm assuming, if I'm feeling that way, that probably European lawmakers on the other side of the Atlantic are thinking the same thing. Like he's going to do it, So we've got to put together something. If we're going to, it's got to happen. And anyway, I hear. Go ahead.
The thing is, so far it's been, the European side has been very, they're not budging. So they're saying basically, this is what we're going to do, take it or leave it.
Right.
And they're trying now, the UK the lawmakers are trying to get rid of the leave it part. So at some point they'll have to take it, right? I mean, if you can't, if you can't agree to something, you have to be able to walk away. And this is the main weapon that they've got. So I don't know what's going to happen. I really don't. I don't think anybody knows what's going to happen, but it's very frustrating to see this happening, because I'm not saying Brexit is right or wrong, but this is what the people voted for. And theoretically, this is what the government should deliver. Now, is it going to happen with a deal or no deal? It doesn't matter. It has to happen. So, and that's what Boris Johnson has been saying from day one. So, let's see what.
I think secretly you're a Boris Johnson lover, and I didn't think that before, but I think it now. So yeah. And anyway,
I am not, trust me. But you know what? If somebody's gonna make it happen, I think it's probably gonna be him. So let's see.
Yeah. Well, we'll see. Hold on one second.
Actually, while you do whatever you do, I can also say one thing about Australia. As you very correctly said, we had the RBA overnight, and what they did basically is for the short term, they said, look, we're not going to do anything. We're watching what's going to happen. The main thing, obviously, being the China-US trade wars, and unfortunately for Australia, they are very exposed to commodities, because this is what their main export is. And their main trading partner is China, who's basically running commodities, the commodity market. So they're completely dependent on them. They're still dovish. They're still going to act, I think. But for now, they just said, okay, we'll take a step back and see what happens.
And we can adjust if needed. Now, but are you surprised as I am to see the Aussie looking as decent as it looks? Like I said earlier, and I don't know if you were listening in, I'm surprised the Aussie didn't break down. If I was short Aussies, which I'm not. Matter of fact, I just sold my Aussie Canadian that I was long from the weekend. But if I was short Aussies, I'd be like, why aren't we lower? That's what I would be thinking.
I thought that when I saw the headlines come up, I thought the Aussie was going to break lower. But I agree with you 100%. You have to think, if you're short. If I was short here, I'd be a bit worried.
Yeah.
So, hey guys, I heard that Howie Mandel is flying out to London to do the Deal or No Deal broadcast. You ever watch that show?
Yeah. Oh yeah, of course.
Okay. Fine.
I
host it.
I was long some Aussie Canadian over the weekend, and the guys and gals in the chat room knew I was playing this longer term support, divergent relative strength, 127% extension of this move, and I was like, as long as we stay above 89, I was going to get long, and I did, and I just got out of it because we might be in some sort of triangle here, but I like the way the Aussie is actually. I like the way it's holding up. Like I said, I don't mind being long the like this particular pair. I was more capitalizing on this move that we saw in the dollar Canadian. I think the dollar Canadian just squeezed the heck out of people that were short. So I know we're heading up to some resistance here in the dollar Canadian. So I just wanted to take that Aussie Canadian off. And like I said, if you were part of the Forex Analytics community, you knew that I was taking that position. That's not a currency we normally cover on Forex Analytics. It's not one of our 30 tickers that we have, but it is, I still trade things outside of the realm of what we cover here. So now I know Steve is here right now, but we don't know if he's going to continue to be here because
he is actually not. His internet connection went down about 10 minutes ago.
Oh, it did. Okay, so
but we will have, if you want, we will have Paulie for the last 15 minutes.
Okay, yeah, we'll bring Paulie in the last 15 minutes here. But Steve is getting looks like his whole city block is being dug up as they're laying some new internet cables, some fiber down, which is, it's good ultimately for him, but for us that are, for those of you that were waiting for his analysis, you're going to have to wait probably a little bit longer here. So let's take a look at some of these other majors really quick. Well, first and foremost, I'll go over to the U.S. dollar Mexican peso. This is shown another failure. I actually had some euro Mexican peso long at 22 over the weekend. I sold it right at the gap open. It was long right here on this. You can see it right here. As we dipped here on Friday, to the 122 level, I bought some. We gapped up and we moved higher, to this 22.13. I got it out at 22.10 as soon as it gapped up on Sunday. I just got out of it, but I'm a little worried about these the failures that we're seeing here in the peso pairs. This is one of the things that if you guys are short, if you're short S&Ps or short risk in general, you have to be a little careful with this because these peso pairs are showing you that risk appetite might actually bounce. And look, I'm not long-term bullish in equities, but what I remember of this time of the year with the S&P is we usually have a rally like through mid-September, and then the market will find some sort of top, and then we roll over going into the fall, and then we rally for Christmas. I mean, I'm just giving you my normal scenario for what I typically remember for this time of year. And so if I'm looking at the S&P right now, I think the risk is that we actually move a little bit higher in the S&P, maybe towards 3,000 before rolling over. That's what I think. And that doesn't mean it's going to happen. I'm just saying that that's what my working assumption is going to be at this point in time, is the S&P actually, bounces a little bit here. And like I said, the dollar Mexican peso is showing that is a risk. And I think the dollar Mexican peso, if I had to imagine what's going to happen here, is we're going to do something like this, and then we're going to eventually break out going into the fall. I do want to be short the US dollar Mexican peso, or short pesos, long the dollar Mex. It's just I'm not doing it right at this moment. But it is this is what I think is going to take place in the pair. I'm just giving you my gut instincts, personal opinion. We talked about the Swissy. We talked about these Nordic currencies, but if you look at the U.S. dollar, Swedish krona, man, this thing is so dang strong, and you can't really stop this this bum rush right now. And I know on Friday I talked about the divergent relative strength, and I drew this red trend line, and I said, but the risk is, if you go back and listen to me on Friday at this webinar, I said the risk is that we continue to break higher and relative strength breaks through and continues up, and that's how prices end up going higher. And that's exactly what's happening right now. We're seeing this this move higher towards the 161% extension, and relative strength has broken higher as well. So that's just an observation. I think we could go higher, but if the euro did find some sort of support today, in the event that the euro did, we end up bottoming here, then maybe the US dollar Swedish krona actually stops. This would make me feel a lot better about being long euro dollar, is if the US dollar Swedish krona reversed. Remember, the Riksbank does meet this week. I think they meet on, I have to look. We don't have it on our calendars because this is Nordic currencies that sometimes does a little bit different. Let me get rid of that. And Sweden. There we go.
It's on Thursday.
Oh, okay.
Thursday, yeah.
Well, there we go. Thursday. Yeah. Here it's going to happen at 12:30 in the morning for me, so I won't be around. But on Thursday we're going to see the Riksbank, in their rate decision. They also are expected to keep rates unchanged, but if they come in a little bit more hawkish, or maybe less dovish, maybe we get a very similar reaction that the Aussie did. I'm sure they're looking at their currency going, wow, it's weak. But, in this environment, I think everybody enjoys a weaker currency. If there's one way the rest of the globe can stick it to the US and our trade war, is just to have a weaker currency compared to the US, right? It's how you offset these tariffs, and you just have a weaker currency. And the dollar is obviously strong, not only against the dollar index against the basket of currencies, but the dollar is strong against most, except for the yen. I think the yen is really the one that's stuck out more than anything. So here's the dollar index, and the dollar index very similar to what we're seeing in the euro. However, let me grab this trend line here. We could, if you looking at these peaks over here in the dollar index, we're probably getting close to some pretty key resistance. And that's the inverse of what I was showing you with the euro at wedge support. I think the euro holds above 109. I may be wrong, but I think 109 is gonna try to maintain its strength around these prices. Take a look at some of the yen pairs. We have the dollar yen. We're in this very sloppy descending channel, and we're in it right now. And we're just nudging our head up against this 106.40, 106.50 level. We can't really break above it, but with the dollar looking as strong as it is against all these other majors, I'm surprised that the dollar yen hasn't tried to break out higher, but it might. Like I said, if risk appetite improves and we see the S&P, go to 2950 or maybe 3,000, then the dollar yen is probably a good buy somewhere down here. But I'd like to see it break above this resistance in order for that to happen. The other yen pairs, euro yen still trades heavy in this descending channel, and you can see it has not broken above its resistance here, so we're still in this down channel. Pound yen staying below the breakdown point, which was key. Aussie yen still below channel resistance. I can continue to draw that out. It's still descending channel. Kiwi yen, same thing. Descending channel. No reason to be long that yet. It's still pretty bearish. And Canadian yen, similar situation. So, but these yen pairs, I think they all, if they break higher, it's going to start with the dollar yen, and then it's going to make its way into the other pairs. Like you'll see the New Zealand yen and the Aussie yen, Canadian yen start to reverse course first. But keep an eye on stocks. And like I said, stocks are they are showing a little sign of life right now. But I think this time of year we might see a little rally in risk first before we see risk succumb to some of the selling that we normally see in the fall. Now Paul Franco is going to join us this morning since Steve's not going to be here today. So let's see if Paul is live. Paul, are you here? Let me see here.
He's logged in, but he's muted.
I don't see him muted. Oh, I see him. Oh, Paul?
Can you hear me?
Oh, yeah, we can hear you. What's happening,
Okay.
man?
I was actually trying to log in at the same time that you're talking. So
Oh, okay.
I listen on. I always tell people I've listened on the MacBook. Hang on, let me see if I don't think I have your screen yet. I listen on the MacBook, but if I do the webinar, I listen on the other computer. I mean, I log in the other computer, so I had to make sure I turned the other one off so it wouldn't be that back noise or whatever you want to call it.
You know, I do the same thing. It's like if I'm listening to the webinar, I listen on my laptop that I run a couple monitors next to my main system, and then but when I'm broadcasting, I broadcast from the main system. So it's, you know, I get exactly what you're doing. So so how you doing? What have you been doing since the open? You know, on Sunday.
I picked up the euro. We talked about, actually, I did the basic technical analysis over the weekend. I know you do it all throughout the entire week. Sometimes I'll pop in, let's say in the middle of the week, but and on there I had the support for 949 with 948 with firmer support at 929, 928, and I got long this morning at 929, and we're just kind of holding steady here. That's about the only thing I've done. It looked like we were going to possibly, break below that, going into Asia, because this euro was dropping like a rock, and I thought the dollar index, which I've got bias chart support in a level at 99.44, I thought we were going to hit it because I thought there was a possibility RBA might cut, but they didn't. So we're kind of hanging around these levels here, and we'll see what happens. But you had mentioned about the data coming out, and one other piece of data is coming out, but it's just final figure on it, is the market PMI, market manufacturing PMI, and that one was already at 49.9. So the final figure will come out. So that was already below 50. So you're right. If the ISM manufacturing, obviously, what you were saying was the only thing that's probably going to keep the dollar from moving higher and possibly pull back a little bit is if we start to see a weakening of data.
Yeah, I think that would be the catalyst that would drive the dollar lower from current levels, is we'd have to see a deterioration in economic data, which, we haven't really seen. I mean, we've seen some, but it's not in comparison to everyone else. It's still holding up relatively well. So and so that's why, ISM is going to be really important this week. The jobs report on Friday is going to be really, really important as well. Now, are there any charts that you wanted to show this morning?
Yeah, we can go and take a look at. I mean, I just cover a general look over of the majors, and then of course some of the cross rates, and obviously Boon's making, as you pointed out earlier, Boon's making new lows again, which obviously has driven the euro, to new lows again. But yeah, I can go in and go over the charts, and like I said, being out.
Go ahead. I don't know which one's you. I see two of you logged in, so I can't.
I can. Let me see.
Go ahead and grab it. Let's see. I'll stop sharing. And by the way, for those of you that don't listen to Paul Franco's the Daily Roundup webinar, that's free for you guys to listen to. It's typically at the end of the European session, so you guys should listen in, because it's good to get prepared for Asia, when you can listen to Paul, and he can go over and show you what he's seeing. And one of the things I have a huge amount of respect for Paulie is that Paulie's been trading for a living for quite some time, and so it's good to listen to somebody who has who does it and does it successfully. So so what you looking at here, Paul?
Can you see my screen now?
Yep, sure can.
Okay. One of the things I was looking at also, let me just go on, and you made a good point here with the dollar CAD. I guess I'll touch on that real quickly. Is we finally got past this 33.36. One of the guys was asking the room earlier last week, and I was saying, hey, look, that 33.36 is holding like a rock. I wouldn't step in and buy it right now at that point. And we, shortly not too long afterwards, we did fall, and we fell back, challenging that 32.56. But we finally got above that 33.36 right now. We've got some resistance here at 33.18 now, 33.82. Now the door's open for them to challenge 34.15. But once again, we'll see what happens with the dollar index. But Some people may take a little bit off here around 33.82. Even though we just broke out, my concern has been that with what the dollar index has done, you would have thought that the dollar CAD would have already taken off well beyond that. And I'll tell you why I think it's important here with the dollar index here is we've got our bias chart resistance we've got here for a level is coming right across here. You see these touches, 99.44. But we also have a bit of a confluence here, which if you look on the, probably it'll be a little bit easier with the 2-hour chart. 99.40 is the 127% extension from this area right here. So, and these are just drops on a Friday, and you'll see this happen where, like I remember a couple of Fridays ago, the dollar index was trading right at 97.60 the whole time, or 97.68, and then on the close you just see this massive drop. And then of course when it opens up on Sunday, it's almost like as if this didn't happen. But if you take this move from here to here, right up here at the 98.93 down to this drop down to 97.21, and that was a key level right there for support. Well, 99.40 puts us right there at the 127% extension. So as you said, maybe we'll see the dollar index kind of, we've already rolled over some people, maybe forced some people to, or if they felt forced to go in and buy the dollar index, i.e. selling the euro, and we may be coming into an area where finally we can see a little bit of an ease back. You talked about the cable. We broke below the 120. On the cable, there's actually an extension also. And we have for today's bias chart support, which is a little bit low. We actually had 1958, which is right where it came in, but that was because that's where it was already at. It already hit 1958 by the time we came on the air. But we do have 127% extension at 1933. So if it takes one more dip, watch that area there. I think what we could go and hold, but we're still, like I said, this pair is so volatile for right now. And I think you made a good point with the peso too. That was my concerns when we did the peso analysis for the week.
Yeah, the 2020 levels are such a huge, weekly resistance. It's enormous, and we're really struggling up here.
You had that great trade from when you got long the peso on that Friday, and then we gapped right into this zone here that we have here. And I'm looking here at the daily. We talked about this zone, and boy, you got out at this most perfect spot. But we had this zone. We were looking for this market to run into some trouble, and sure enough, it did. And I don't know. I don't have the. I can pull up the daily. I guess we'll have the analysis on that. But we were talking about. Right here, the dollar peso closed the week on minor support level at 20.05. Although bullish, the pair is open to a pullback to 19.85 with solid support at 19.67. Resistance is 2013. Although today we updated for the bias chart 2014 with a 2-hour close above, allowing a challenge of 2032. Well, we'd have to get a 2-hour close. We got a 2-hour close above this area here. Then we could challenge the 2032, which is the next area. But right now, for today's bias chart support, it's going to be 2003. We had 2014, and over the weekend, we had our analysis to show resistance was actually 2013. We just revised it up, penny or whatever you want to call it, just a little bit. But it does look susceptible for a pullback. And I saw the Euro MEX, and I don't even generally trade those. But let me try and share that because you made an excellent point. And we generally don't follow these, so it'd probably be a good opportunity to go in and share that and talk about that one. Let me.
Which one?
Screen that one is. It's number 3. Hang on. Okay, so here you talked about the Euro mix, and you can see here how we found this nice trend line. And I noticed this the other day because you had been talking about the Euro mix. We had a nice shooting star here. Right there, and then we saw a dip, but it wasn't that big of a dip. So we challenged it one more time, and you can see as we lost this area right here, the market struggled, and since then we've broken this nice little short-term uptrend line here. So you're right, it does look like if you look at the peso against the euro, you look at the dollar. I don't trade the peso against a whole bunch of other pairs. I do trade against the dollar every now and then, not that often, but certainly you make a pretty good case that we could go in and slide further. And my thoughts are that potentially the dollar peso can get down to this week down to 19.85. And if the wheels come off, look for a move to 19.67. There should be some great support there in that area. And moving on to, let's take a look here. with the gold market. Still holding up relatively well. I mean, one of the things that there is a bit of a concern with gold is we've been talking for months and months, and I used to trade gold pretty active and really haven't done much with it. I mean, I've traded a couple of times, but not that much. But the thing is, as we had talked about months ago, is that it's the interest rates that are going to actually get this market to move, and certainly they did. But if you look at it, here's the bunds going to all-time highs, and inversely is going to be all-time lows in rates. And look, gold still can't get a grab a foothold. And in the past, gold trade, people say, oh, it's all about going to be about the dollar, and it wasn't. It was about the interest rates, because once interest rates started breaking, that set gold off on fire. But the dollar is having some impact here, because even though interest rates are moving to lower prices, lower yields, we're not getting this move here with the gold market. So keep an eye on it. We already kind of lost some footing here over the last week or week and a half. So there's a potential that if we do start to see some kind of a slide, we'll probably see this thing slide a little bit further. I do have some good support coming in right there at 1508. I think that'd be a nice area for if someone plays it from the short side to go in and shoot for. Let's take a look here. And obviously with US Shield still holding steady. Now we do have, as I said, a market manufacturing, but that's the final reading. But that being said, the reading on that market manufacturing, and we'll pull that in here. You can see here it came in at 49.9. So we'll see if that continues to remain below here. And let's see here. We do have Canadian data at 9:30 Eastern, 8:30 Central Standard Time, which is their PMI is going to become market PMI. And as Blake said, we do have ISM manufacturing PMI. That's coming in actually at 9 a.m. It's going to be interesting to see if we do go in and slide below 50. If we do, that's probably about the only thing that's going to go on in and yank this market down. Let's go on and move back into the main screen, or we can actually take a look at these other cross rates. And sorry, I'm all over the place. I'm just basically filling in as the backup for Steve as his internet down. So I'm over here jumping all over the place. So sorry if it seems a little bit. I'm all scrambled around. But anyway, that being said, let's take a look here. One of the pairs that...
You're not scrambled, buddy. You're a great omelet.
Thanks, Dale. One of the things that you can, to me, really shows the weakness of the euro is, boy, this euro Aussie had gone to the moon, to the freaking moon, and looked like it potentially could go higher. And you can see here, and we'll move here. I'll look at it at the daily. I think it makes it easier to show here. To give you a sense of, one of the things I've picked up from Blake over the years was that Blake would look across, let's say you're looking at the euro, you think, well, the euro looks pretty strong right here. And I don't mean right now, but I'm saying is you look, okay, but then Blake might say, yeah, but look at it against the Aussie, look at it against, other pairs, look at it against the CAD. And that's what gives you that extra strength or that extra conviction. If you're seeing, oh, great, I'm seeing the euro, it's already starting to break out against this pair and it's holding up really well. That will give me that extra conviction to go long here or keep my longs and look for more, let's say euro versus the dollar. Well, one of the things that I'm looking over here with the euro Aussie, and this was the analysis, very short over the weekend, was euro has broken the major weekly level of 63.41, allowing for a challenge of 61.76 with initial support at 62.39. Well, you can see our 62.39 so far it's held. We're at 62.56. But you can see this is a very big level here. And once you can see here where the euro odd have been challenging. Look at this. We come up here and give you an idea how important this 63.41 was. So we've been marching and finally we started bumping our heads up against, and this is all the way back from March of the previous year, not this March, but March all the way back actually into 2017. And so as we made this run up here to 63.41, we had bumped our heads. came up to here, bumped it a second time, you know, the old double top, and we saw a pretty good little fallback. So we challenged back again here to the 63.41, got a nice little shooting star here, saw this market break down, and it was like the little engine that kept pushing against it. Once we broke above 63.41, boy, you know, a lot of stops had been triggered, and man, did we race off. I know there were some people that, I remember getting short up in here, and unfortunately for me, I was just barely, you know, like day trading. Some of the other people did fairly well as they got short. I know Rick in the chat room trades this thing like crazy. But I know one guy who, well-known trader, was looking for much higher. I think he was looking for 74 or 75, something like that. Because I had mentioned, hey, well, this is a pretty good weekly resistance if I went way back in here. But the thing is, the key thing is that we broke back and you know, what's resistance becomes support. So we came back to this 63.41. Let me pick that up, make it easier for you. And then we made another run up here, and we failed. And look, now we've broken back. So we all know, and Blake has talked about that, how weak the Aussie's been. Now we're starting to kind of hold here a little bit in the Aussie itself, the Aussie versus the dollar. But wow, if the euro can even break against the poor weak sister, the Aussie, then you know things are really in trouble. And so we broke this key weekly level here, the 63.41 that they worked so hard to hit itself up against the head and break above it, then come back and support it, make another challenge. We've broken. Doesn't mean the wheels are going to completely come off the caboose, because I think we'd have to lose 61 cents on at least 2 consecutive daily closes to say, uh-oh, this thing is really going to see a better correction. But the euro is under some trouble. We did come into the 62.39, which is a support, but you can see we've had some tougher times with it. Now against the Kiwi, we're holding up a little bit better. Things are not as bleak. Let me pull this back. So we're still holding our own here versus the Kiwi. So you know, obviously the big weakness in the Kiwi. Now, what was 63.41 with the Euro Aussie? I would attest that to 73.09 with the Euro Kiwi. And it's still holding up relatively well. We did point out the Euro Kiwi closed just ahead of support at 73.74 after taking out the 4 prior daily closes. So obviously the Euro was so weak, setting up a challenge of major weekly breakout level of 73.09 with additional support at 72.70. Well, the key thing is we're still holding above it. So once again, you know, if we look at it, we think about the euro in itself, it's probably kind of neutral in the sense at this area. Now, I picked some up because we had our Bosch chart support 928, and there's a hell of a lot of support, and I'll show you because with my analysis, I always go where all the touches are. So let's go on and swing back in there, and I just want to show you. So let's go and take a look here with the euro. So you can see here, we came down here in this. I had this with the analysis for, you see, with last week's sustained break of 1075, the euro is targeting a move to 804. Initial support comes in at 948 with firmer support at 928. So that's what I'm looking at now. Like I said, it is true. So a lot of people have been saying, I know Man's been talking about, and I know Steve has been talking about 108 since Moses crossed the desert. And but I tell you what, they're dead on right. This year was one dog currency, and we talked about it about a week ago. And then with what's her name, Lagarde saying, "Oh, there's more room for stimulus." Basically, she basically let the dogs off the leash. Although she put a caveat saying, "Well, you know, we will be, you know, basically we'll look to see if things are appropriate." Oh, come on, that's like saying I'm going to go speeding, but I'll be careful. I mean, if you're speeding, you're speeding. Well, the thing is, she basically let the dogs off the leash, and that really broke the euro lower. But we have come into an area of support, and you can see what I'm talking about is here's that 928 right here. Look at all these touches in here when you look at the daily. And all these touches go all the way back in, down, and back over to here. Look at this. Quite a ways, all the way back to 2015, but probably about the summer of 2015. Look at this area. We come down here. Yeah, we do overshoot it, but you can see this grouping. So there's a lot of volume. And then we get a pretty good sharp rally off of that. And then we go on and pair back in here. We kind of hold it, and we break lower. Same thing here. You look at this grouping here. A lot of good volume. And the same thing, we rally up real strong off it. We come back, test the 928. We get one day or a couple of days where it gap below, but then it comes back up and challenges again. We rally back up to 116, and we come back, and guess where we come back to? 109.28. And then we rally back up, we come back down, there's a little bit of a fight. We make one more last charge up the hill, and we fall back, and we congregate at 928 before breaking lower. And on the way back up, same thing, we congregate at 928. So this is a very key level. Doesn't mean it's going to stop on that very pit, but really anywhere between, probably seems a stretch, but really anywhere between that and 40, 50 pips, you can say there's a lot of doggone support coming in right there. And so if you're short, I wouldn't want to be short at this point. If you're looking for the 108, eventually you may be right. But in the meantime, we may see a bit of a rally ahead of ECB, because you have to think, wow, the Bunds have already gone and pushed beyond. And I also saw something on, Dale has a guest coming on, so I don't want to go and take up any of the time, but we are at a very key area with the euro. So if you're short, probably see a little bit of covering come in, but I'll go in and jump on out and let Dale take off with his guest. But we'll catch you on the daily wrap up, which comes in at 12:30 p.m. Eastern time.
Not just a guest, Paulie. One of my favorite guests, Adam Button's going to be with us.
Oh, wow. Yeah, I like him.
He's going to be talking about seasonals and great mentoring. So everyone here, you heard it from a pro. You have to look left. That's where the market's memory is. Thank you, Paulie.
He shared a little blurb on Friday about an app where you can use it in case, let's say, you listen to other things, like you have a squawk, but you like to listen to music or whatever else, and it'll actually, when you use that app, you can actually it'll actually let's say if your main thing is a squawk, you want to make it'll actually mute any other program so that the squawk jumps out. It was pretty cool. You might want to ask him about that. But he shared that app on Friday on Twitter. But anyway, I will let you go.
I will. Thank you, buddy. You could prep all my interviews. All right, I appreciate it. Okay, Adam, let me find you now. I had you up here. There you are. No, more.
Hello.
Adam, how are you? Can you hear me, buddy?
I can hear you. Can you hear me?
I can. All right. So thanks for coming in at the beginning of the month to talk about seasonals, Adam. You're one of my favorite guests for many years now. And the screen share is a little green box.
Yeah, working on it here. Got it.
Okay.
Get some charts up there. I don't have
okay.
charts to show, but
there we are.
How are you doing? How's everyone? I just heard all they're talking about the Ducker I was talking about on Friday.
What, you have a new app that you guys are offering for?
It's not us. It's a totally free thing. Nothing we're selling. It's kind of something I discovered a little bit, and that's the problem, right? When you're doing anything. I mean, I always have a squawk going, and I actually have two squawks going. And the problem is, if you're listening to, say you want to listen to music, or if you're listening to watching a YouTube video or whatever it is you're doing, and you have some audio in the background and the squawk comes on, it was always a competition, right? And you couldn't really make out what they were saying. And this, it's called a Ducker. And it has, I guess, maybe public address announcement kind of utilities. Normally you could you set it, it's a video and explains how to set it up on your computer, just this little app. But if you're running a squawk, and it'll mute something the instant the squawk comes on, and then it'll kind of go back to that. So it gives you this little audio cue and you don't miss anything. So it's a handy little utility that I made a video on.
You're always on the lookout to share what you've discovered to give you an edge in the markets, Adam. I respect that about you. So, and everything you guys do at Forex Live, I mean, you really serve the trading community, and I really respect people that are out there every week trying to help and build up traders in a pretty difficult endeavor. So talking about difficult endeavors, at the beginning of the month, you kind of have a look ahead based upon your research on seasonals. So why don't you tell us about a few things that the seasonals are pointing to this September?
Well, I mean, August was incredible for the seasonals. We were talking about it then. And the great, the differences in months is a lot of times you take a month like August, and generally wasn't exactly true this year, but in generally it's kind of a month that's on a bit of autopilot because there's less news. You know, central bankers are on vacation, politicians are on vacation in general, and you kind of get this seasonal drift that works really well. And at the start of the month, you talked about it was a really strong month for gold and weak month.
Yeah, I remember you liking the gold last time we talked, Adam. That was before the acceleration to the upside.
Yeah, well, I mean, Trump really helped out with that trade there for a bit, but you know, it worked out really well. We had a little report card on the August seasonals, and they were really hit it out of the park. I mean, it was Kiwi weakness was another one. It was August was the top month for that. And then you get into September, it's a little bit of the flip side because you have always these fundamental setups coming into the month. You know, I mean, there's a million things really coming in the next month, and that is typical of every September. So you get less of the seasonal skew, but there are, you know, a few things that come time and time again on the seasonals. And I'll pop up you know, show some of the things I look at. And, you know, one of them is kind of how you can set up into the end of the year. There's a few sort of end of the year trends, and one of them is oil weakness. And that is kind of just a snap.
It's really starting off this way, starting off that way today, bro.
Well, it is. And I kind of have a theory on what's happening with oil because it's moving forward. And you look kind of over time, the general theme, there's always been end of year weakness, but it's been pulled forward. And I believe that for many years it was always boosted around this time of year by hurricanes, right? Anytime you had a storm, years ago especially, you'd get this spike up in oil. But now it's changed because of U.S. production in oil becoming so high that now you can even have a situation where if a hurricane hits the right way, you lock in exports stuck in the U.S., you can drive down oil. More or less, it's not as positive as it used to be. I think you get this anytime there's a spike in September in oil on a storm or a hurricane, you get this really aggressive selling. And I think it's creeped a little bit earlier. And I think if you see anything in September, it's an opportunity to sell it. So, you know, not necessarily a September trade in and of itself, like a buy and forget about it trade or sell and forget about it. But there's some weakness there that really creeps in, and you'll see it really kick in later in the year. Another one is it's a weak month for stock. Oh, go ahead.
Oh, you know, anyway, when you look at crude and you look at the daily, it's a big descending triangle. We break under $50. It measures under 40. You think that's achievable?
Yeah. I you know what? If you look at the way oil companies are trading, it's insane. I mean, it almost looks like it has to go to 40 because they're trading as if they're going to bankruptcy. And you know, you have like good companies that are making a lot of money at even 53 here that are, you know, like dividend yield of 15%, that kind of thing. And it's just, to me, looks like the oil market is ready to roll over. I don't really believe it because I think it's, you know, fundamentally, I look at it, you know, all the cars today that are burning oil are still going to be on the road in 15 years. You know, a lot of them are. But yeah, it's definitely the descending triangle. The last few times we tried to get higher, have been these series of higher lows or lower highs, pardon me. We don't really have the lower lows yet, but it's kind of consolidating around this lower part of the chart. And you know, it doesn't look great. Seasonally, it's not great. And you know, fundamentally, we can see a lot of things start to roll over here in the next little bit. So
okay, so a negative trend for oil. What else?
Well, you compare that as well with CAD, and it is a negative month for CAD. It's not, you know, the weakest month for the Canadian dollar, but it's, you know, among, I think, third or fourth weakest number. Yeah. So dollar CAD, the September, really through September, October, November period is pretty strong. And you can you see it really kicking off today, as far as I'm concerned. You break above this 133.50, 40 level, and you know, you couldn't get above there all throughout August. The Canadian data has been sparkling forever now, but eventually it's not, you know, you can't beat month after month, day after day on economic data, and eventually it levels out. And if you back it up and look at year to date, CAD is flattish. Kiwi and Aussie are down 15%.
Yeah. Is the BOC going to relent to the global trend and begin to ease?
I think they will. I believe, you know, I even think there's a chance. I mean, I was just looking at the numbers. It's 6% chance of a cut this week. We meet on Wednesday, tomorrow.
Okay.
I keep thinking today's Monday, but of course
Yeah.
the long weekend. So they meet tomorrow. The market isn't really looking at a cut, but you can only get it. You know, one of the most powerful things you can do as a central bank is surprise. And we only really have one crack at surprise here because they'll have to foreshadow something in October. I think at the very least they imply a cut in October, which is no real different from cutting. And that's what you're seeing in the Canadian dollar, getting ahead of it. And if you know it's a strong signal, you're probably up to 134.50 around the highs of the year there. Maybe not tomorrow, but over the next few days. So yeah, I think it fits in nicely with some seasonal weakness in the Canadian dollar, seasonal weakness in oil and stocks. It's a poor month for stocks. Over the longer term, the last few years, it hasn't been that bad. But we have some weakness in the stock. So it kind of lines up, I think, for a dollar CAD trade on the FX side.
I know it's a fairly new instrument, but I mean, everything's about the trade war, right, Adam? Do you have anything in USD Yuan? We're pressing new highs. It broke out on the announcement of new tariffs a few weeks ago, came back and checked it. Any view on the Yuan? I think that until the Yuan starts to come back down, there's, you know, I look at it as more being a risk-off environment. Do you see it that way?
Here's how I don't have the chart. I have the chart on Bloomberg, so I don't have it on this graphic here. But I mean, there's not so much to talk about the chart. It's just blue sky above where it's broken out already.
Okay.
But here's how I see it all coming to pass: is that the bond market's signaling a deep global slowdown, right?
Yeah.
And the way it gets to the U.S. or to North America is via the currency market. I think you're going to get a much stronger U.S. dollar in the months ahead, and it's we have Trump complaining about it already, but the market's like this evil genie that squeezes you, right? And even not even applies to the president of the United States. I think we're going to see the euro really roll over, the yuan roll over, 5-6%, maybe 10% in the euro. And then you just have to have some importing of weakness in the United States, right? You get to buy corporate profits and you see some layoffs. And I don't think the U.S. is hurt in the same way, but I think the currency market is really about to buy dollars. And you see it even today, it came off a little bit, but we have the euro finished last month on the lows, right? Finished last week on the lows.
So 10%, you're talking under parity for a longer term objective here.
I think that's, the first target's going to be parity. There's 104 right at the bottom of the euro there. And there's nothing to like here. And I even wonder if Draghi doesn't say, you know what? I wonder what the FX market reaction to that would be if he says, you know what, we don't really have much we can do here. It's time for governments to step up. Because at some point you're going to get there, right?
So you need the monetary route has been losing potency for a long time. And, you look around the world, including the U.S., for people to get something done fiscally with all this, diametrically opposed views and people just trying to stop each other seems to be difficult. But I also want to get back to the recession. Have you ever heard a recession being promoted and talked about, an upcoming recession before a recession so loudly in financial media? Because of the inverted yield curve?
It kind of speaks to the financialization of the economy, right? And this 24-hour news and bombarded about everything and vile political backdrop and everything. And I remember when the yield curve inverted in 2007 or 6, whatever it was. And it was we talked about it, but you didn't see it on the front page of the newspapers. You didn't see it on CNN. I mean, now it's predicted all these yield. Everybody wants to talk about the yield curve, and this recession's coming. It is. And it becomes that self-fulfilling prophecy problem, right? And people cheering it on, which speaks to, I don't know. You could probably get deeper into what it means in the world, but you've never seen anything like it. Who would cheer on a recession? It's crazy. It's so much.
How about this, Adam? That the reason the trade war and the softening in the manufacturing sector is not hurting the U.S. as much is because it's 11% of the economy compared to what, 25 or so in Germany and China, the rest of the world more dependent on exports than us, and that a recession won't happen in the US until you start getting weaker numbers on the consumer. And I was reading that, you know, with what's happened to real estate prices here in the US, what a recovery. I mean, you know, a lot of places are much higher than they were before the housing crisis, and rates being this low, that the consumer has about 6 trillion in real estate wealth to tap into like an ATM on their properties. Wouldn't that help stave off
You know,
a
that's why
recession?
it's so hard to put together the pieces for a recession. I think you can probably get, you know, under 1% U.S. growth, and that maybe feels like a recession, and that is really the tipping point, right? Because you have real estate. I believe I've been wrong about real estate. I thought it was going to pick up last year, but rates got up. You know, what a 30-year fix got up to 4.5%, and then the market just wilted. But now it's way back lower. American housing is still relatively cheap if you look at it from a European perspective, even a Canadian perspective. Maybe not, you know, on the West Coast where you are, but
Yeah, nothing's cheap here.
but in a lot of places it really is, and I think that can go and help the consumer, and rates lower, like you say. So that it's hard. But if you were to make the U.S. dollar so much stronger, I think corporate profitability becomes a problem, because I think 40% S&P 500 profits are generated outside the United States. So if you take away that, you start to run into a lot of problems. And, you know, there's pressure to cut costs and whatnot there. And then again, that mentality comes around, and plus investment just isn't happening. And isn't, you know, you might have consumer buying, but if you don't have businesses investing, that's half the story right there. And if you look, you know, I ask people this question: what's Walmart investing in right now?
Basically, they're investing in expanding. They're going to have healthcare services, the consumer, and their online business.
And they're online. Well, that's what you know. The answer is, yeah. Well, they're investing in their website. So,
Okay.
you know, if you had Walmart investing in expansion, you know, you're buying steel, you're building stores, you're hiring, I don't know, 100, 200, 300 people a store. Now, if you're investing in your website, you know, how many people are you really hiring? 500? How many people does it take to rebuild a website? I don't know. Maybe it's 1,000, but it's, you know, in all companies, we're investing in technology right now. And the companies that aren't investing in are scared of it. And they're not investing in anything. And I think we've hit this kind of tipping point in technology where companies are either the disruptor or terrified of being disrupted. And it's left like this old-fashioned investment in plants, machinery, buildings, sideline for now. Everyone.
Okay. All right, shifting gears to metals. Okay, they've been stars, but one of the features over the last couple of weeks, Adam, has been how the gold-silver ratio has come back in from well over 90 to trading in the low 80s. Do you think this is the beginning of that gold-silver ratio, where you could have sold your one gold coin and bought 90 silver pieces?
You know, I think we talked about this last time. I'm not the guy who likes to overcomplicate it. I think anyone.
But that's right. I remember now.
has said, listen, I've overcomplicated so many trades, and so has everyone else who's been out there.
Oh, I did that today too.
Ruined a good idea, a good simple idea by overcomplicating it. You know, if you want to buy crypto, buy Bitcoin. If you want to buy metals, buy gold. Look at this chart. I mean, that's it. It's a genuine breakout in the best way. Yeah, maybe back to 1,400, probably at worst. Save some powder if you have to, but I just think that's going to new highs over time. I mean, these have been the best 3 months you're probably going to see for a while, but you know, it's monetary. We're in an easing cycle globally. We're at zeroed out on rates. 17 trillion in negative yielding debt, if not more. The gold is unbelievable trade, and silver too. But I don't see a need to get onto that, and I don't really have any kind of edge on that.
Is there anything that could change the interest rate picture, or is it in cement forever?
With Trump, you can't rule out a resolution on the trade war, right?
Would that change the
bond market?
negative yields situation in Europe?
I think there has been a paradigm shift in consumers, central bankers, and the whole world realizing we're not getting back to the old inflation paradigm where we're getting 3, 4, 5% inflation. And central bankers have realized they've been wrong so many times that now they're going to stay low until inflation comes, right? Before it was, okay, we have to get ahead of inflation. It's coming. It's coming. We promise it's coming. Okay, we were wrong last time. We're going to be right this time. Well, now they're saying, you know what? We're just going to keep them low until inflation comes. And that, I think the bond market has moved a lot on that. And it really changes the mathematics of a lot of investments. And so I don't see how it can change unless you really got some wage growth. And I just, it's not coming.
Is that the only thing wage growth is the only thing?
Yeah, it is not entirely out of the question. I mean, there's definitely some pressure on the lower end.
Because I don't know, it's like one of these asset classes where everyone's right. Because last year, all the money that moved out of equities moved into bonds and bond related, and they're buying junk like it's AAA. And it just seems like the whole world is right about being long bonds. And you know what? Not just treasuries. Anything that has BOND at the end of it.
Yeah, especially looking
Isn't it crowded? I mean, it's crowded, but continues to be right.
It's truly the greatest bubble of our time. I mean, if you look at 30 years, buying bonds 30 years ago was insanely, it's better than stocks. And it just, you get to zero and you think, well, this has got to be it. And now you just go below zero. And it's madness. And I don't know if we're at the point where it's pure exuberance, but we've got to be close. And
I'm just trying to think of what pin could possibly pop the bubble, and I come up with, the trade war continues to escalate, and China wouldn't have to do a lot. I mean, the world's already accepted they're not buying treasuries, but the world has not. It has not been made known that they might sell treasuries, and they wouldn't have to sell a lot to create a bit of a panic, don't you think?
I mean, if you try to push up yields, I struggle to believe so, because you just have money coming in from Europe that it would sell boons that buy treasuries, and that's the reason I feel like the dollar, it's really can, the dollar's been a bull market as well for I don't know how many years now, good 5 years anyway. And a bull market probably doesn't end with a whimper. It ends with exuberance again. And I don't feel like we're there at all with the dollar. And that's the way I see it going until you see yields negative. Maybe that's the end of the bond market when
you mean here in the U.S.
When the 10-year T note gets below zero. That is maybe the blow up. But what do you do when you can't buy bonds anymore? If you get blown out of bond, you buy maybe gold. You can't go into stocks if bonds are blowing up. So I don't know. I don't understand.
Okay. To me, I think these are the lowest rates in 300-400 years, right? Or at least to the Civil War. Any view on the yen that, has broken down a lot of its correlations? I mean, it would trade with gold, it would trade with yields, and with what yields have done, it seems like we should be not just having taken out the flash crash low, but trading well beneath it with what's happening in treasuries. Any view on yen here?
And I feel the same way about the Swiss franc, and even more so. These, we have this risk trade going, and they could easily roll over. And, I talk about the yuan and the Chinese getting beaten up. And I think the yen, if you were to add, 5% to the yen, you start to run into trouble. You get above or below 100. You start to run into some trouble with exporters in Japan. And that could, you look at this setup right here. It's just trying to make this bottom here at 105. And if that goes, you're probably down through 100. You start to get some hand wringing in Japan.
92.
Yeah. Oh, yeah.
A lot of the you know, bond bulls have been talking 92 yen for a while.
And I'm shocked. I'm in the same camp as you, surprised. And even more so with the Swiss franc. I guess it's that intervention premium. But I think the stakes are kind of raised now if Japan starts intervening, the Swiss start intervening, and that it's a green light for America to get involved. I don't think you can stop U.S. dollar strength. And one of the seasonal trends that tied that back is dollar Swiss. It is a very strong month for dollar Swiss.
Okay.
Second strongest month on the calendar for dollar Swiss. Seasonal.
Interesting.
So it's the same trade. It really is
right
again. But I'm interested to see through September 12th in the ECB how the S&B reacts, because if you look at the initial 120 euro Swissy peg and then the break, it was always around an ECB event that pushed them over the
okay. And then I think you mentioned that September can be a negative month for indexes, stock indexes. Does it look like it could make one more charge, or we're finally going to have a failing rally here?
I think it's a range trade. I don't have that up as well. I mean, I could probably pull it up here pretty quick with a snapshot, but I mean, I think so. Yeah, I don't want to. And, you know, it comes back to a little bit of fundamentals. All right, what's the Fed going to do? Well, I don't think they're going to be as dovish as the market would like. And then, what happens in the trade war? What happens with the ECB may not be as dovish as well. And that probably is that tips it over the edge, or a little bit of yuan weakness as well, maybe some euro weakness, any one of those things. And I guess that's part of what the bond market is saying. It's kind of surround trends.
There's S&Ps in the box.
And that's it. I think, yeah.
So if we take out the upside of the box, it would measure to new highs, 3,100 or so, wouldn't it?
It could. And that, that's the old pain trade, right?
Right.
I mean, stocks peaked in October 2007 last time around, well after, housing started to roll over, and the bond market inverted, the yield curve inverted. So, why can't it do that again and flush everyone out one more time? I'm bearish.
Clear off the bears, yeah.
But sure, that's the trade as far as I'm concerned. Is to go with whatever this goes for now. But it is seasonally. It's some of the weakness has not been around the last few years, so I caution a little bit about September weakness. But
well, another great run through the board, Adam. I think we've covered almost every asset class: currencies, energy, metals, stock indexes. Anything else that you might want to add that I didn't ask you about?
I just think we're trying to struggle with this yield curve picture, and I think what it says is it's very fragile right now. Fragility. You can't measure fragility in markets, and one thing really has to go wrong, and that's going to tip over the apple cart. I think that's what the market's saying right now, whether it's the trade war, whether it's the dollar strengthening a lot, whether it's something completely out of the blue, that we're in this situation right now where the global economy cannot take another blow.
Shock.
A shock, yeah.
Okay.
And a shock is a strong word, but even a mild shock, I think, at this point is where we're at. So when that happens, and maybe the trade is to wait for it to happen and then just pile into gold, to short stocks, to short oil, probably even sooner than that.
Well, I think that one of the best places, besides, of course, ForexAnalytix, to be prepared for potential shocks is Forex Live, Adam. And what a great job you and your team do there. Why don't you show the people your website and what you have to offer? And I really appreciate you coming in, buddy. Like I said, I know any time that we're having a conversation, I could ask anything, and I learn from you every time we talk.
Thanks, buddy. Well, likewise. This is our site. We cover things in real time. You can see it updating just as we spoke there. Mike Pence is in Ireland at the moment, so we cover news in real time with a bit of commentary along with it. We try to be very quick. It was a free site. I'm not selling anything. We cover 24 hours a day. and just try to be a kind of commentators on the market as it rolls. And, you know, we had a record month in August. We just had 10,000 subscribers on YouTube.
Wow.
We're, you know, it's the market's interesting right now, and fundamentals certainly matter. So we're there and hanging in there. We didn't even talk about Brexit today. That could be a shock that tips things over.
Yes. Gosh, I forgot that.
But, you know, everybody's heard enough about Brexit. And today, I think 2 p.m. Eastern is around when we're expecting a vote. This is the video that I mentioned. You could probably find it on YouTube like that. You search Ducker and Forex Live. Showed you how to use a squawk.
Do you guys do a similar thing, like interview other traders outside of Forex
Yeah,
Live?
we try to find the time. We're 4 guys covering 24 hours, and, and we have, you know, we have all these ideas that we've had for years and years, and, you know, it ends up just being something comes up. So we try to stick to what we do best, and we hope to expand and grow and do that, but we we don't. So
look at that handsome Canadian. All right. Well, you know what, Adam, you know, again, thank you, my trading warrior brother. I hope that you and everyone your work touches during this fall trading season clean up and win the Super Bowl in January. Okay.
All right.
So thanks again, buddy.
All right. Thanks a lot for having me.
Really appreciate your input and your seasonal work. You're one of the best, bro.
Oh, yeah, thanks so much. Always a pleasure to be on. Take care.
Okay. All right, everyone, that's Adam Button. You can find him at Forex Live, at FX_Button, and that's a wrap. We'll see everyone return around Wednesday, because today's Tuesday. And remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thank you, Adam.